Welcome. My name is Van Richards. I'm a chartered financial consultant, and today we're talking about all things IBM. If you've listened to the finance news recently, you've heard a lot about IBM. Last week, they came out with the announcement that they were spinning off a part of their business. Yesterday, they came out with their earnings, and lo and behold, today they dropped by 6.49%. So I guess that Wall Street was not impressed with their spinoff intentions, and they were not impressed with their earnings and their report yesterday. And the fact is, they also didn't give any guidance towards the next quarter. So that kind of throws a wet blanket on the whole situation. But today, what I want to do is dive into the stock just a little bit, because you know what? When a stock falls, it actually presents an opportunity. And if you're putting together a portfolio, one of the best things that you can do is pick out stocks that you really like. And when they are cheap and they're on sale, buy them. So today I want to help you to identify some factors with IBM and help you to look at it so that you can identify whether it would fit into your portfolio. I help people to design portfolios for retirement plans, for saving plans for the future. And I'll tell you that if you are interested in talking to me personally, I only work personally with people that are in Texas, but if you want some help, go over to richardsfinancialplanning.com. You'll see that little teal button that says schedule a call. Click on that, and there's a calendar that will come up, and I'll be glad to take 20 minutes, and there's no charge for that. I'll be glad to talk to you. If you're anywhere else in the world and you've got questions, I'm glad to answer them. Just enter them into whatever platform that you're listening to. And if you're listening on Facebook or on YouTube or on Twitter, hit the like button. Let me know what your thoughts are. If you've got questions, let me know what your questions are, and subscribe, because I've got lots of more information that's coming out as time goes by. Okay, let's get right into the nitty-gritty about IBM. And first, I have a little information that I've prepared for you that I want to go through. Let me make this just a little bit bigger so that you can get an idea of it, because this tells you, it kind of gives you a little background about the divisions of IBM. So let's take a look at this together. Okay, they have $111.8 billion in market capitalization. Actually, I think that number's a little bit less because I prepared this before the market closed. Since they were down about 6%, that's going to be off just a little bit. But let's take a look at what came out yesterday. As the news came out, obviously today things dropped because there wasn't a lot of confidence over the last 5 days. If you look at the spaghetti graph, this was last week right after they announced the spinoff. Wall Street didn't like that. They weren't impressed. And then yesterday after the earnings, that's what happened too. Over the past year, what we've seen is this stock has actually gone down from $126.31 to $117.37. That's a 7.08% drop. Now, it's interesting, over the past 10 years, this stock really hasn't had a lot of growth in it at all. 10 years ago in 2010, it was selling for $101.78. And of course, today, it was at $117.37. So that's really a measly 1.44% APR. Now, you may be sitting there saying, why in the world would I want to own a stock that only earns 1.44% annually over the past 10 years? Well, there may be opportunity that's out there. So let's take a look and see what that opportunity may be. The spinoff that's going to be happening was announced last week. Morningstar is saying that the company is going to be called NewCo. Other sources are saying they don't have any idea. The big shining star right now for IBM is Red Hat. Their cloud and their cognitive services division. This comes straight from the report that was out yesterday. It shows that that side of the business was up about 7%. But the part that's dragging it down is the global business services and then also the global technology services. Now, this is the side of the company that is supposed to be spun off. It's going to represent about a quarter of the value of the company. It's going to represent about a quarter of the employees for the entire company. It hopefully is going to help them to focus so that they can center in on that business from Red Hat, so that they can center in on their cloud services. They also showed that they were down in systems, and that's going to be the big mainframes, down about 15%. Their financing division was also down by quite a bit, actually about 20%, but you can tell that's not a big part of what they do, but it is a part of what they do. Now, this is the best part. This is my view of what the best part of this company is. It's dividends, and I love dividends, and I hope you do too.
The beauty of your side.
The shining star for this company is dividends. It's at 5.19%. So if you're a dividend investor, you're probably going to be interested in how stable is this dividend. So let's take a look at a couple of different things that might tell you that. If we look at the earnings history, remember there's three things that we look at with a stock that tells us if a stock is a good stock. The first thing is going to be earnings, then competitiveness, then stability in the market. So we look at the earnings, every quarter has been right on target. They have met their expectations. And I think that was one of the reasons why we saw the stock drop so much today, is because they didn't come out with any guidance. So there was no way that they could tell. All that you can go off of right now is what the independent analysts are saying, what they're projecting that the next quarter is going to be, because IBM's not going to show any cards. Because of the COVID-19 crisis, they don't feel like that they can give an accurate indication as to what the next quarter is going to be. And that's not something that's unheard of. There's a lot of companies doing that right now because there's a lot of uncertainty out there in the economy, not just from the political system, not just from the lack of stimulus in the economy, but just the fact that we don't know what's going to happen. Now, if you go back and you look in the notes that I have in the past videos, I told you all about this back about March, that we were going to have a recovery that was going to look like a W, that was going to be based on outbreaks of the virus. It was going to go up, it was going to go down, it's going to go up, it's going to go down. I did not think that we were going to have a U-shaped recovery, and I did not think that we were going to have a V-shaped recovery. It's a W, little forward, little back. We'll get back up to good performance as time goes by. But that 5.19% dividend is actually, in my modest opinion, is pretty safe, because if we look at what was reported yesterday, it shows that the basic earnings per share was $1.90 per share. And if you compare that to last year at the same time, it's up about a penny of $1.89. Now, what difference does that make? The difference is that every quarter, this company has had a good history of paying quarterly dividends. That's why a lot of you that are out there that are retired, that are looking for income, this may be something that you really want to pay attention to. A year ago, they were at $1.62 per quarter. They went up a little bit in May to $1.63. In the last quarter in August was $1.63. And I expect they're probably going to do the same thing coming up for the next quarter in itself. Now, the moat of a company, remember what a moat is. A moat is going to be that imaginary barrier that's between the company and their competition. So what we really have to look at when we're looking at, can they maintain, are they stable? We have to look at some of these different areas. So let's look at them together. The switching cost for IBM is a big deal. And it's a big deal really because of number 5, the fear of interruption. Let's say, for example, if you're a stock exchange, you've got millions and millions of transactions that are occurring every single day. You probably don't want to change your systems because you're afraid what happens if it doesn't work. Or if you're an airline and you've got millions or tens of thousands of people, well, maybe less now than there was a year ago, but still you got a lot of people in the air. You want to make sure that your computer system is working and it's not going to have flaws in it. So you're going to work with what you know rather than what you don't know. So the fear of interruption is a big deal. Also, they have a lot of intangible assets. They have a lot of intellectual property that has patents to it. So that helps some of the stickiness. And when I say all things IBM, one thing that makes customers stick to IBM is the fact that everything that they have works together. That's a great idea. If you've got one aspect of your business, if your mainframe and your cloud service and your other systems are working all together and they can communicate very well, then that helps a lot, and that gives them a competitive edge. Okay, so let's keep going on though, because what we want to do is take a look and see what the bulls and bears are saying about this particular stock. The bulls are really looking at this and saying that the spinoff is going to allow this company to focus on cloud computing, which, as you saw when we looked at the balance sheet a moment ago, it was the shining star. That's the thing that actually made the money. So if we can get rid of some of the divisions that are weighing us down, then this will help us to move forward. Another thing is Red Hat, that cloud computing service, was up 17%. And the CEO of the company was out actually just today saying that he expects Red Hat to be able to double revenues within the next 3 years. So that's their goal. Another good thing that a lot of bulls are recognizing is that the customers for IBM are faithful. They're incredibly faithful. The other aspect is, and this is the last one on the bulls, is that the logistics partnership that IBM has created works very, very well. And that's really hard for another competitor to actually duplicate. Now, let's look at some of the negatives, because never is everything rosy. The fact is, and actually Morningstar wrote about this just today, that there are some out there, some analysts are saying that this spinoff is nothing more than window dressing. It's probably not going to enhance anything. There's a lot of underlying problems that still have to be taken care of. Now, the fact is that even though that they do have loyal customers, if you're a loyal customer, you probably use other services from time to time. You may love shopping at Kroger, but if Walmart's got the sale on something that you need, you're probably going to go there. And the same thing happens with IBM. Even though that their services, you have loyal customers, if cloud services are working better with AWS and it's not a big interruption in your usage, you may be looking at that. The other thing is that the use of the cloud in itself is decreasing the use of mainframes. And then the last thing I want to mention to you that is a bear issue is that Microsoft just has a better database system than IBM does right now. If you research it, you're going to find that that is one of the things to look at. Now, how do they compete with other companies? IBM competes with a lot of companies, and I couldn't put them all on the spaghetti graph today, but what I did is I picked out a couple of actually kind of narrow it down. Microsoft is probably one of the biggest competitors with IBM. Amazon is too. Now, Amazon has a lot of other wheels turning, but AWS is one of the biggest cloud services that's out there, and that's one of the biggest competitors that IBM has. Oracle is another competitor, as well as Cisco. Cisco more along the lines of something like an Accenture, where they're going to be having technology consultation. And some of that's going to be going away with the GTS service as we go along. Now, the companies are huge. These are great big companies, trillions of dollars. And they all are large value companies. Now, when you hear that the economy is changing and we're going to be going from growth to value, don't believe that all the time. The reason is, do you really think that even though that Amazon is a growth company, that it's going to go into hibernation and it's going to stop producing? Probably not. Is IBM going to be able to wave their magic wand and just because they're a value company, they're going to be making profits? Probably not. It all comes down to those three things that I mentioned to you: the earnings, the competitiveness, and the stability of that particular company. Now, let's take a look at the 3-year history of these companies in issue. As you can see, the Oracle and the Cisco are right around the same place that IBM is. If you look at the spaghetti graph, Microsoft and Amazon have just taken off, and they're continuing to go from that standpoint, even though that they have a lot more wheels in the water from that. Now, let's take a look and see what Morningstar is saying about the fair market value of this company. The way, remember, that they pick their fair market value is going to be a multiple of earnings. It may be EBITDA. It may be something that's going to be earnings before income taxes and stuff like that. But they may pick it from that standpoint. But they're saying right now that the fair market value of IBM is $125 per share, whereas today they closed at $117. So really, this stock, according to Morningstar, is trading under its value at a discount of 6.1%. So they're giving it 3 stars. Now, if it goes down to 87.50, it would be a 5-star stock. Now, what are some of the other analysts out there saying that even though that we've had a lot of information that's come out, what are they saying about this? Well, with 9 analysts that are following IBM, what we're finding out is that 4 of them say that this is a strong buy and 5 of them say that it's a hold. So when we average all that out, it still comes out to be this. It still comes out to be a moderate buy. So with all that said, my question to you is going to be this. If you bought IBM, why would you be buying it? Are you buying it for the growth or are you buying it for the dividends? If you're buying it for the growth, there's more speculation that's in there. That's the idea behind investing. This is playing the Wall Street game. Are they going to be able to make profits based on the fact that they're spinning off some of their technology services and they're going to be focusing just on, well, not just on, but primarily on their cloud services? I tend to lean toward the yes side on that. If I'm buying it for income, yes, this is probably a good stock for income, but you have to also understand that stocks' dividends are not guaranteed, just like the value is not going to be guaranteed. You've heard this a million times from me. The past performance is not going to be a guarantee of the future results. But we have to understand that if you haven't had a history of paying dividends, there's not going to be much history going forward. But this company has a good, strong history of paying dividends. So if you're buying it for income, I think it's a good stock from that standpoint. Okay, so I've gotten kind of to the end of everything here. And last thing I want to tell you about is that if you do want to talk to me about your portfolio and you're in Texas, go over to my website at richardsfinancialplanning.com. Also, you can read lots of cool stuff that I've written there too. If you can sign up for an appointment, 20 minutes, I'll give you for free. But you have to be a Texas resident. If you're outside of the United States or outside of Texas, I'm glad to converse with you through the platforms and answer your questions, but I can't give you personal consultations. Okay, folks. So I'll tell you that with all that, I have a lot more information coming up tomorrow. I have no idea what stock I'm going to follow tomorrow. Follow me and we'll see what happens. Y'all have a good evening.